We'll take a look at that with our market watchers. So let's just take a look firstly at what the Kenyan market has done for the day, and starting off with the blue chip index, as you can see, is 0.7% gain there. So the market certainly resuming its upward march. On the currency front, post the decision to cut rates, we're seeing the shilling, just taking a look at that graph, against the US dollar. It has shown some slight weakness overall today, but sitting at 83.9, below that 84-point level as it stands still. But let's get into this rate cut with Ted Macharia, investment analyst at AIB Capital. He's standing by from Nairobi. Ted, thanks for joining us. So just looking at the decision here, 100 basis points off the key lending rate, 8.5% is what it stands now, and the central bank basically saying they're hoping to encourage the private sector to augment growth that we know is already taking place in Kenya right now. Do you think that it was the right move by the central bank?
Thanks for having me. We have been predicting the rate cut for about a week now, since the inflation figures came in at a stable 4.14. We've been seeing the shilling strengthening against major currencies. The economy has been stable. The outlook is positive. So the move was widely expected as an auxiliary support for the government's growth agenda to stimulate the economy fiscally. We are expecting banks to lower their rates, although at a very lagged period. But the idea was to just support the decentralization that is taking place currently.
Now, there have, of course, been flags raised about the deficit that currently stands, current account deficit 11.4% of GDP, saying that that's the main threat to the macroeconomic outlook. But then you say, they basically say, the central bank, that is, that strong growth within East Africa and increased trade within East Africa is going to be a positive for growth going forward. It's going to be a positive for the shilling. So that is an interesting dynamic to highlight this time around in the policy statement.
Yes, it is. Our counterparts, Uganda, have maintained their CBR at 12%. Inflation there has also stabilized. Tanzania is also doing okay, despite of the recent terror activity, but business is still good. So we are expecting Eastern African growth to support all our systems, especially Kenya, in the devolution process. Obviously, the deficit is a bit of a concern, considering that the budget process has also been thrown into haywire by the timetable that government has set up. But we are positive, and we are pegging most of our hopes on the fact that the growth is real. We are seeing it in the works, and we are expecting strong GDP growth.
Let's talk about the assessment of commercial banks in Kenya, because also highlighting that banks in Kenya certainly moving outside of the main hub and moving into the East African region, but also saying that banks are solvent, they see them as resilient, and saying that despite the fact that there has been loan growth and a growth in the volume of loans, they see credit risk at this point in time as low. So that, of course, is a positive signal there around the banks. Do you agree with their assessment there?
Yes, I do. The model is a little bit different. We see it as the more banks lend out, they lend out small quantities, the risk is lower. And I think that model is a little bit strange and alien to most countries. But here, that's what works with the SME segment. An Equity Bank, for instance, has been a very good carrier of that message, that they can still give small loans of between 10,000 and 20,000 to so many people, and still have the same low risk that a big bank would have. So betting on the private sector, particularly the SME sector, and extending credit, cheap credit on small amounts is a good path for Eastern African banks.
But what do you make of the spread between the central bank rate right now and commercial lending rates? Because that we know is an issue. Equity Bank and the likes always say that it takes time for adjustments to take place. But do you think this, of course, this rate cut puts further pressure to create an environment that is conducive for borrowing right now?
at the end of the day, the banks will feel the pressure and they will lower their rates. So the problem is that there is a big lag between when the CBI rate is dropped and when the banks decide to drop their rates on loans. We have tried looking at the best solution. Perhaps increasing competition would be the best factor. If we could have a single credit agency and we were able to move our loans, then maybe the banks would be forced by competition to lower their rates, but otherwise they'll try and maintain their net interest margins for as long as possible and drop them when the whole market decides it has had enough of those high interest rates.
Let's just quickly talk about Access Kenya, because the stock has rallied on the back of news that Dimension Data in South Africa, UK based of course, is wanting to buy Access Kenya. Do you think this is a good move? Do you think that shareholders are getting enough of a premium there, the 42% premium that's being offered with that 14 shilling a share offer?
Access Kenya has actually been suspended from trading activity since yesterday afternoon, so it did not, there was no activity done, and it's just for the sake of due diligence and for the whole acquisition process to begin. I think investors will be looking at it from a positive angle. The counter has rallied from the lows of 2 shillings at the beginning of the year, perhaps more so this year. The fuel of the acquisition has driven it to those highs of 9 shillings and 85 cents. So that 42% premium might look attractive to some investors, but again, you might look at the counter and say Access Kenya was trading at 35 shillings towards the close of 2008, and maybe that value has not been lost, it has been gained. So we might want a price of higher than 20 shillings. But at the end of the day, I think the 42% is decent, but we'll have to wait and see how the extraordinary meeting goes and how they will decide to go about the acquisition.